Welcome to Pimpy's Investment Chat, where we keep investment talk simple. And here's your host, Pimpy.
What is going on out there, peeps? All right, I told you I was going to get back to you and make a video doing some research to see if the Vietnam dong is under any kind of sanctions and to see if we can figure out why the value of the Vietnam dong is so cheap and see if we can make some kind of comparison to what's going on over in Iraq. All right, so let's get into this. Before we get started, do me a favor and hit the thumbs up button. And if you're not a subscriber, please do so, because when you do, it helps out the channel, and I certainly do appreciate it. You can follow me over on other platforms. I do have my own group over on Facebook called Pimpy's Investment Chat. Over here, we do talk about gold, silver, cryptocurrencies, as well as foreign currency investments. So head on over here and join us. It's free to do so. In here, I do post updates if I should get on suspension from YouTube or get removed from YouTube, and you want to know what happened to me, I'll let you know right here in this group. I can be found on Twitter, MeWe, YouTube, and the cool thing about YouTube, if you come over here and you join and you find my channel, I got videos going back, I believe, a couple years. So if you want to see some older videos that I have on Nasera, Jacera, gold, silver, cryptos, come on over here and join. Look me up and check out my videos. You can also find me on Odyssey, catch me on Rumble. When I say that the links for all these are down below in the description, some of you don't know what I'm talking about. It's real simple. Just go down to the bottom right here of any of my videos. See this? This is the description. Hit show more. And there are all the links to all the platforms I just spoke about. Okay, there's not a whole lot of news about what's going on in Vietnam as far as the currency is concerned. The dollar just gained very little on the Vietnam dong. But really, other than that, there's not a whole lot of news. But I did want to follow up on the status of what's really going on with the Vietnam dong and share with you guys. So here's some of the things I found out. Vietnam actually has no sanctions. No sanctions imposed on it by the United States or any other country. There is no sanctions on the Vietnam dong. The Vietnamese economy has been steadily growing now over the past few decades, and the country has made significant progress in trade and economic developments. Well, here's really what happened. Although it's been experiencing growth in its economy, it really didn't open its doors to foreign investors coming in for a long time. That just recently started to happen. The Vietnamese government has taken steps to liberalize its economy and promote foreign investment, and the country has become an important trading partner for many countries, including the United States. In fact, in 2020, the United States and Vietnam signed a landmark trade agreement, the United States-Mexico-Canada Agreement, which includes Vietnam as a partner country. I did not realize that they were part of that agreement. The Vietnamese dong is relatively cheap compared to other major international currencies like the US dollar or the euro. There are several factors contributing to this. One of the primary reasons for the dong's stability is achieved through a combination of direct intervention in the foreign exchange market and the use of trading band within which the dong is allowed to fluctuate against other currencies. By managing the exchange rate in this manner, the SBV aims to promote export-led growth by keeping Vietnamese goods relatively inexpensive in international markets. So what Vietnam is doing is manipulating their currency, basically, but they purposely keep their currency low because they are an export country. So you have Iraq, who mostly imports, and you have Vietnam, who mostly exports. It makes sense for Vietnam to purposely keep their currency low. That's what I was explaining about Iraq as well. Foreign investors will come in there because their currency is so cheap. This allows them to manufacture or produce over there, both in Vietnam and Iraq. Labor cost is cheap. Iraq has more of an incentive to increase their value because they are mostly importing, where Vietnam, there is no real incentive for them to increase the value of their exchange rate because they mostly export. And like this article says, it keeps them competitive against other countries when it comes to goods and services because it's so cheap for them to manufacture over there in Vietnam. Another factor influencing the value of Vietnam's currency is the trade balance. Vietnam has been running consistent trade surpluses in recent years, meaning that it exports more goods and services than imports. This has led to an accumulation of foreign reserves, which can put downward pressure on the value of the Vietnam dong. Additionally, a trade surplus can lead to an influx of foreign currencies into Vietnam, further contributing to the depreciation of the dong. See, usually each country wants a lot of foreign reserves. We saw this happen with Vietnam. Every time the Feds hiked the interest rates, it affected their markets over there in a negative way. So they ended up having to use their foreign currency reserves to protect the value of the Vietnam dong until they weathered the storm. So they're good now as long as the Feds don't continue to raise the interest rates anymore. They stabled out is what happened. Vietnam's economic development and inflation rates also play a role in determining the value of its currency. As Vietnam continues to develop and modernize its economy, there is an increased demand for imported goods and technology, which can put pressure on the exchange rate. In addition, if inflation rates in Vietnam outpace those of other countries, it can erode the purchasing power of the Vietnam dong relative to other currencies. Vietnam's decision not to significantly increase the value of its currency is because Vietnamese government has maintained a relatively stable exchange rate for the dong, which has been a deliberate policy choice aimed at supporting the country's export-oriented economy and maintaining competitiveness in the global market. One of the primary reasons for Vietnam's cautious approach to currency valuation is its heavy reliance on exports as a key driver of economic growth. By keeping the dong's value relatively low compared to other major international currencies such as the US dollar and the euro, Vietnam can make its exports more competitive in the global market. This strategy helps to support the country's export-driven industries, including textiles, electronics, and agriculture, by making Vietnamese goods more affordable for foreign buyers. So this is what I'm talking about. Since Vietnam, there is no sanctions, and they got their act pretty much together. The only thing that's keeping the currency from going up in value is the government. They are purposely holding down the value so they can be very competitive on the global market. Furthermore, a stable exchange rate can also provide a level of predictability and certainty for businesses engaged in international trade. This stability can be particularly important for attracting foreign direct investments into Vietnam, as it reduces the risk associated with currency fluctuations and provides a favorable environment for long-term investment. Yeah, I bet. That's why a lot of our major companies leave here and go to Vietnam. The labor cost there is way cheaper. And I've stated this before. Why pay a union worker $30 an hour when you could pay a person over in Vietnam to do the same work for, $10 a day? I'm not saying I agree with it. I'm just saying that's the reality. Another factor influencing Vietnam's currency policy is the country's desire to maintain macroeconomic stability. A sudden or significant appreciation in the dong could lead to challenges such as inflationary pressures, which could have adverse effects on domestic consumers and businesses. By carefully managing the exchange rate, Vietnamese authorities aim to avoid disruptive economic shocks and maintain a balanced approach to economic development. Geopolitical consideration also plays a role in Vietnam's currency management. The country's geopolitical position in Southeast Asia and its relationship with major trading partners, including China and the United States, can influence its currency policies. Vietnam may seek to avoid actions that could lead to trade tensions or disrupt its economic ties with key partners. So again, the difference between what's going on with the Iraqi dinar versus what's going on with the Vietnam dong, Iraq is still trying to regain their sovereignty so they can do all their own decisions without being babysat by the United States. Since they are not an export-led country like Vietnam is, there's no incentive for them to keep the currency cheap. They actually want to increase it to give it more purchasing power because they're an import country. Unlike Vietnam, who has no sanctions, whose economy has been growing for decades, they purposely keep the currency cheap because they export more than they import. So in order for them to be competitive on the market, the cost of goods and services and labor has to be cheap. This way then they can sell their products really cheap to other countries. And the thing that's keeping these products and services cheap is the fact that they have a cheap currency. So it doesn't look like Vietnam has any incentive at all to increase their value of their currency, which is disappointing. So I'm not even sure what the incentive is to hold on to the Vietnam dong. I have some, I won't get rid of it, but really, if their entire goal is to keep the Vietnamese dong cheap so they could be competitive on the market, then I just don't see them rushing it anytime soon to increase the value of their currency. Not at all. You guys let me know what you think. I look forward to hearing from you. I'm out.